film and television producing, and I have a debt of $65,000.
My debt is about 30.
What if I told you that the path to the American dream is no longer straightforward? It has turned into a twisted maze of debt and despair.
Real questions. Can I honestly have children because of the loan? And, I don't feel like I can do that.
The policy of student loans is a total failure. I mean, $1 trillion of debt.
The colleges need to justify what it is they're doing with our tuition dollars and our taxpayer dollars.
This eye-opening video will reveal the harsh truth about student loans,
crushing student debt.
I have $69,812.
$47,000.
$90,000.
$35,000.
$350,000.
$60,000 worth of student loans.
My minimum student loan payment is $1,000 a month.
and how they've transformed from the key to success to a financial burden that haunts millions of Americans for life. In the early days of higher education, student loans were a relatively new concept. The first federal student loan program was established in 1958, designed to provide access to higher education for all Americans, regardless of their economic background. At that time, the government was committed to ensuring that higher education was accessible to all citizens, and student loans were seen as a way to achieve this goal. However, the program has changed dramatically over the years.
Student loans that just over $1 million.
You're kidding.
And no, sir.
And the cost of attending college has skyrocketed. In the 1970s, the federal government began to guarantee student loans from banks and other private lenders. This shift allowed more students to access higher education, but also led to skyrocketing tuition costs. As a result, colleges and universities began to raise tuition rates, knowing that students could borrow whatever they needed to pay for their education. By the 1990s, student loan debt had become a significant issue, and the government stepped in to create new loan programs designed to make college more affordable. One of the most significant changes was the creation of the direct loan program, which allowed students to borrow directly from the government rather than through private lenders. This change was meant to make the student loan process more transparent and to provide borrowers with better protections. Unfortunately, the cost of higher education continued to rise, and student loan debt became an even bigger problem. According to the Federal Reserve, student loan debt in the United States now totals over $1.6 trillion, and it's continuing to grow. As a result, student loan debt has become a significant financial burden for many Americans that they may never fully pay off. Student loan debt has a significant impact on the lives of millions of Americans. For many, it can delay essential life milestones like buying a home, starting a family, or pursuing a career. The burden of student loan debt can also lead to higher stress and anxiety levels as borrowers struggle to keep up with payments. One of the biggest challenges of student loan debt is that it's not dischargeable in bankruptcy. This means that even if borrowers file for bankruptcy, they'll still be responsible for repaying their student loans. This is a significant departure from other types of debt, like credit card debt or medical bills, which can be discharged in bankruptcy. The impact of student loan debt can also be felt on a broader scale. For example, many borrowers cannot contribute to the economy in the same way they would if they were debt-free. They may have to delay starting a business or making other investments because they're saddled with student loan debt. This can have a ripple effect on the economy as a whole. Given the significant impact that student loan debt has on so many Americans, it's clear that something needs to be done to address the crisis. There are several potential solutions that policymakers and others have proposed. One solution is to increase funding for higher education. By providing more financial assistance to students, it's hoped that fewer people will need to rely on student loans, which will ultimately help reduce the overall amount of student loan debt. Another potential solution is to provide loan forgiveness or debt cancellation. This has been a hot debate, with some arguing that borrowers should be responsible for repaying their loans and others arguing that the burden of student loan debt is too significant for many Americans. Some proposals have called for targeted forgiveness for specific groups, such as those in public service professions, while others have called for broader-based forgiveness, A third solution is to reform the student loan system itself. This could involve capping interest rates, reducing fees, or providing more flexibility in payment options. For example, some have proposed creating an income-based repayment system, allowing borrowers to repay a percentage of their income towards their loans rather than a fixed monthly amount. Regardless of the specific solution, it's clear that the student loan debt crisis is a significant issue that needs to be addressed. As the cost of higher education continues to rise, more and more Americans will be forced to take on significant amounts of debt to pursue their dreams. It's up to policymakers, educators, and others to develop creative and practical solutions to ensure that everyone has access to the education they need without being saddled with a lifetime of debt. While the financial burden of student loan debt is significant, it's not the only cost that borrowers face. Many people also experience a significant emotional toll while struggling to manage their debt. For some, debt repayment stress can be overwhelming, leading to anxiety, depression, and other mental health issues. The fear of defaulting on student loans can also be a constant source of stress. Defaulting on a student loan can have serious consequences, including damage to credit scores, wage garnishment, and even legal action. This fear can lead to a sense of hopelessness and despair, making it even more challenging to manage the debt. In addition to the emotional toll on borrowers, student loan debt can also impact families and communities. Parents may feel a sense of guilt or responsibility for their children's debt. In addition, communities may suffer as young adults delay major life milestones such as buying a home or starting a family because of their debt. While the student loan debt crisis may seem overwhelming, there are steps that borrowers can take to manage their debt and minimize the financial and emotional impact. Here are a few tips. Understand your loans. Make sure you know your loan type, the interest rates, and the repayment options available. This will help you make informed decisions about how to manage your debt. Create a budget. Take a close look at your income and expenses and create a budget that allows you to make your loan payments while still meeting your other financial obligations. Explore repayment options. Depending on your income and other factors, you may be eligible for income-driven repayment plans, which can reduce your monthly payments. You may also be able to consolidate your loans or refinance them to a lower interest rate. Consider a side hustle. If you're struggling to make ends meet, consider taking on a side hustle or freelance work to increase your income and pay down your debt more quickly. Seek help if you need it. If you're feeling overwhelmed or you need help managing your debt, don't be afraid to seek help from a financial advisor or student loan counselor. As the cost of higher education continues to rise, it's clear that the student loan debt crisis is not going away anytime soon. However, there are signs of progress. For example, some states are taking action to address this issue, such as offering free community college or creating loan forgiveness programs for graduates who work in certain professions. In addition, broader reforms are also being proposed, such as free college for all or the cancellation of all student loan debt. While these proposals are controversial and face significant political challenges, they highlight the urgent need for action to address the student loan debt crisis. Ultimately, the future of student loan debt will depend on various factors, including political will, economic conditions, and the actions of borrowers themselves. However, it's clear that the status quo is not sustainable, and that significant changes will be needed to ensure everyone has access to the education they need without burdening them with a lifetime of debt. One of the underlying issues contributing to the student loan debt crisis is our society's lack of financial education. Many students enter college without a clear understanding of how student loans work, interest accrues, or loan repayment. This lack of knowledge can lead to poor financial decisions and a lifetime of debt. We must prioritize financial education in our schools and communities to ensure everyone has the knowledge and tools to make informed financial decisions. This includes education on budgeting, saving, investing, and managing debt. By providing financial education early in life, we can help young people make smart financial decisions to set them up for long-term success. It can also help reduce the burden of student loan debt by empowering borrowers to make informed decisions about their loans and repayment options. Financial education is a critical component of addressing the student loan debt crisis. By providing individuals with the knowledge and tools they need to make informed financial decisions, we can help reduce the burden of student loan debt and create a more financially stable future for all Americans. The American dream of higher education is still alive, but the growing burden of student loan debt threatens it. Millions of Americans are struggling to manage their debt, and the consequences are both financially and emotionally significant. However, there is hope for the future. By working together, we can solve the student loan debt crisis and ensure everyone has access to the education they need to pursue their dreams.